Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Tuesday, February 3rd, 2026. It's 3:14 p.m. Eastern Time as I'm starting the video. Let's see if I can do a quick one, get it out to you before the close. Nothing earth-shattering, just kind of updates on all the things I'm watching. You guys know me, I'm all over the place. Call it scatterbrain, call it what you want, but it's just, looking for where the opportunities might be. This is Bitcoin. I want to reiterate, I still like Bitcoin right now. I know nobody does, and that's probably more the reason I like it, but not, of course, not just for the sake of being contrarian. Still at that, what is that, 74,500 ish, nice long term support and downside target that I've had here for a while. This is it. Broke down primary trend line, broke the secondary trend line, hit that 81,200 support, back tested, ran into that resistance there on the second back test, took it down here. And like I said, I'm still expecting a bounce. Quite likely get some of those silver and gold bugs that have been rattled lately into those anti-US dollar folks that believe the dollar is going to hell in a handbasket. And maybe Bitcoin will regain some of its old digital gold luster, as they used to call it, the new gold. Either way, that's it. So kind of looking for something along those lines. And like any trade, it works out or doesn't. So stops will be commensurate with your price target or targets if you took it. And then I told you this is my preferred downside target zone right here. Adding two, not below. We had a slight undercut today, and then we're back on it. So that's for all intents, for about 42, and we're at 42.27. So still offers an objective. And that's fact. That's the all-in position. Not all-in portfolio, meaning a full position. That's the bottom of my target zone. Doesn't get any better than that because I will not buy. I won't add one penny to this trade below there. We start going below there, then I'm going to be just more concerned about stopping out. But as of now, I like that. I like the Ethereum Ether trade as well. Both of those. Yeah, all right. And then, like anything, it works out or it doesn't. So let's go to this trade idea I just gave you today. Gosh, I'm already forgetting the ticker. I don't trade it often, or don't think I have in the past, to be honest with you. It was a software. I picked yeah, I like those spiders are pretty. Oh no, that's not it. Software ETF. It's X something. Um, X. Nope, that's the first one that pops up. There's a couple. Let me try this one more time, guys. Hang in there with me. Software ETF. Yeah, the S&P spiders. Those are pretty liquid typically. You can see this trend line I mentioned in that post. I kind of have to zoom in to show you really what we're looking at, but I did want to mention out that's the COVID low right there. In fact, if you take this bad boy out to a weekly chart, you can see this is the secular bull market uptrend line since this ETF came public and started trading back in 2011. So it is a trend line that I ultimately think will go. Yes, I'm the same guy that just did the video earlier today that told you the market could, at any point crash with this, debt bubble we have. But we're in a bull market. We don't have the next, I'm still waiting on additional sell signals in the fangs. We're still within the trading ranges. And I'll be damned if I'm going to get aggressively short and not look at hedging opportunities when we're in a bull market fresh off all-time highs, right? So it's that simple, and it kind of plays into that or works into that thing I told you earlier about the using leverage not to go for swing for the fences and try to hit grand slams and loading up your portfolio, which eventually you'll blow it up. You do that long enough, leveraging up and going into one security, one sector, one thing like gold or silver, or tech stock, whatever it is, you will blow up eventually and be finished. So what you can do here, this was thrown out as either a pure play long for those that are bullish, don't care to, or don't have a short on QQQ, or don't care to short tech, as well as an indirect hedge. Indirect, it's tech. I mean, that's kind of threading the needle there within the tech sector. But let me show you this chart here. So let's go to, let me type in software. Let's go to the software sector, computer software. I think this is the one I want right here. Okay, this will work. So I have here on this charting platform, MG810 is the computer hardware sector, and you can see here and go to comparison. MG820 is here. I'll just tell you, it's the software and services sector, and you can see a super ooper duper tight correlation. Don't look at the differential, meaning the difference between the two prices. Just look at how they move. They're always going up and down, turning at the same exact point in time, all the little inflection points along the way, the major trend changes. Again, it's kind of simple. Tech is, this is, getting very granular within the tech sector. You have the computer hardware makers. Think about like Dell Computer and the likes, and chips and things, or in the computer, I'm sorry, a computer hardware sector. And then you have the software companies, Microsoft being the biggest one, right? And again, there's hardly any variance between the two until recently. So there's a mean reversion coming one way or another. You can see right here, this is where software peaked and has just been left for dead. Nobody wants it right now, which makes me kind of want it. And then you can see over that same period of time, hardware just took off like a rocket. And so that's pretty much it. And then software, we're going to go through those stocks again. This, we're looking at maybe the software sector turn first, and the bottom of the market's going to fall out. That's fine. And then if you are taking it as an indirect hedge, you should be profiting when the software sector finally buckles. But let's just rifle through the components, and I'll wrap this video up, get out to you quick. So Microsoft, I've already covered this for you quite a bit recently. I'm just going to go here to this 2-day chart, show you that. Remember, I tweaked that trend line yesterday, and I did it on the daily chart. Now I'm doing it here on the this is called a 2-day. It just allows me to go back farther in time to when Microsoft peaked. So 1, 2, 3, now 4. Beautiful. Well, not yet a reaction here. Those are reactions. We're falling down to it. If we stop and trade there for a little while or bounce, remember my hacky sack and / ping pong ball analogy, then it'll be reaction. So I do think it's a stopping point on the way down to much bigger drops. But again, this is the king of the software sector, unarguably, and I'm going to go over the rest here. Oracle, let's see if I have on the daily chart. I should have these marked up. Well, let me toggle back to that 2-day, and annoying earnings on here. Let me turn that off. Where's the earnings? 1 second. Yeah, event markers. I just like to see the little E. I don't need to see the numbers. There's Oracle. Depending what trend line, you've got one right there. Comes off the 2022 lows we're right at right now. Try to move my trend line, fit it nice and tight. I'm not going to do each and every one. You guys will get the drift. So, a lot of these software stocks have fallen to key support levels. That's a downtrend line. I still think Oracle will see over the next year or so, but I'm looking for a bounce. I'm not looking for new highs in these. You have the target. You could see I was looking for about, I think it's a 8% or so bounce. There's Oracle. So at nice trend line support right now. Positive divergence, just like I think I mentioned that Microsoft. I think, did Microsoft have the divergent low too? Yeah, by the skin of its teeth. If it can reverse here off the trend line, I know that's my busy board. Palantir, this one not looking as hot. Beat earnings last night like they always do. Everyone, it's got big government contracts. You read the headlines. ICE is even using them. But there's, that's a more powerful sell signal. But it's what it's done today is on earnings, which if it sticks is bullish. Pre-earnings, it broke down. Now, you've heard me say this once. You've heard me say it 1,000 times. If you're new to the site, this will be the first time. Take any breakdowns or breakouts, bullish, bearish, that occur right in front of earnings with a massive grain of salt. In other words, I usually dismiss those buy or sell signals. So the stock took out its 200s, but it was a pre-earnings whipsaw. They reported last night, was it? Or the night before? And we're back above right now. So there's fewer things in trading more bullish than a breakdown below a key support level, only to have that level recovered, because bears pile in. Again, I wouldn't have shorted the stock with your money in front of earnings. I would have waited to see how earnings went. And now the stock is up and back above there, right on right now. It's splitting the crosshairs, splitting the uprights This is where we're trading right now, above the 200, exponential below the simple. So again, I'm just going over and trying to give you a feel. Somebody asked me about Adobe today. I gave a chart about a week or 2 weeks ago on the site. And again, I think I linked, you can look in the comment section, it's there. I was highlighting at the time we were a little above this 278-ish long-term support. And I said, if we get there, we're going to have positive, aka bullish divergence here on the weekly chart. We've now hit that support. That makes Adobe also an objective long. In fact, if I turn off all the lines, or let's go to what I call a clean board here. That's my fib board. I usually, let me go to 8. I like board 7 for fibs. Right at that previous reaction low from 2022. So again, you know me, I always say an index or a sector is simply a sum of its parts. So for me to make a, put up a trade idea on the software stocks, especially in light of, what's going on in the broad markets, their technical posture, shoe could drop any minute or not, like I said, or not. What I want to see is not just the ETF, because I've never traded that ETF before, the software sector ETF, but I want to see at least the majority of the top 10 components make a case that I could step in and buy them. And that's what I'm doing here in this video for you. So that's it. I would probably tweak these. Oh no, that was a trade idea. I guess I gave it to you back here. Yeah, official trade idea. We hit first target, which was also the downtrend line in the 200-day moving averages. Pulled back, made a new but still positive divergent low. This was the previous divergence we bought it on. I don't know. Sometimes my divergence lines just vanish, they disappear, but I'll put it back. So either way, that was our, I don't know where the suggested stop was. Let me see. I don't know. We probably bought it here at 328. So max target was about a 28% profit. You could give yourself easily a 8% stop loss on it. Let's see, that would have taken us out. So consider it a new trade idea. Or, go with the ETF. Safety in numbers, you don't have to worry about earnings. If you're going to trade individual stocks, just make sure the earnings are out of the way, which they are in Adobe as well. So looks like to me like this sector is probably at least temporarily washed out. It looks like probably a selling climax today. And again, as I go through these charts, and I'm not cherry picking these guys, honest to God, I'm just going through, as I always do when I queue in a sector, which I did XSW, the ETF, I'm going in order of market cap. So I don't need to go and look at all. How many do we have here? 65 out of 100 and, here, you have to move this down. 65 out of 100, 5 out of 160 items. I'm not going to go over 160 stocks. I don't need to, because the top 5 alone probably, they're the sector leaders. Even if they don't have a huge weighting in the ETF, they are the psychological leaders of the sector. So that's it. Crowdsource, not looking so hot. There's one I wouldn't take right now, personally. But, Palo Alto Networks, PANW, I was just at. Nice support here, about 166. SNPS, at support right now. If it goes a little lower, which I could easily see, even better support about 8-9% lower. All right, so that's it. Like I said, I don't need to really go through them all. Take that divergence. This one went a little higher and then rolled over, starting to break the 200. So look, there's some things to like about this sector. It's in a death spiral. It's in a downtrend. This is a 110% counter trend, catch a falling knife trade. And again, like I said, pass on it. If it's not your cup of tea, or if you don't want to take it as a hedge, or you're not, you think you just don't like the chart. There's quite a few that are breaking down, and most of them are just coming off divergent highs. So I will reiterate, all I'm looking for is just a bear market rally or a counter trend rally right now. And there's some of these I wouldn't touch. But collectively, if the majority of those, if you can make a case to go long, and by the way, you can keep a much tighter stop if that's your thing. The stop I gave you on XSW, was based on the final target there. I only gave 2 targets because I'm just looking for a quick bounce trade that either pans out or not. All right, so there's CoreWeave at support right here. XYZ block at support. Again, just too many. I'm going to stop here. I've already covered the top 11. Here, we'll make it an even dozen there. Now let's see scalar. Well, Yeah, nah, it's okay. It's not a great chart. I just don't have great support. It's kind of sloppy. And again, coming off big divergent highs, but you have to ask yourself, okay, how much of that drop right there, that 46% drop that's pushed this stock down, by the way, it has positive Nikkei bullish divergence, just like the other ones I covered. And it's also at the deepest oversold readings. And again, we're in a bull market unless proven otherwise, until our long-term indicators roll over. So this is the deepest oversold reading we've had since right here. And there, if you bought it there, that was an earnings drop, and you were patient, it double tested that low. And if you sat tight and held out, you made 116% from there. So now I don't think it's going to do that again, but it's possible. And so, by the way, that's I'm going to wrap it here and just tell you, when I give you these trade ideas, if you're more bullish than I am on it, what did I say that was? Oh gosh, software ETF. I'm sorry, there's so many X's. I follow all the a lot of the spiders. XSW. Yeah, those are just my bounce targets. If you believe the stock market it's going to new highs, then I think it's very reasonable to believe that the software sector and Microsoft and those kind of stocks are going to need to at least come at, test, or get near or take out those previous highs. So what you do with that is you have a that thing we call a trailing stop. It's a beautiful little setup. You take the trade, you put a stop. Whatever your stop is going to be based on your price targets, your entry price, your preferred stop allowance. Everybody's different. Some people allow wider stops, some like tight stops. And then you let it ride. And that's it. You'll probably come into some resistance here if you come back to the 200 or each of my levels, my initial two targets. And hey, guess what? If something else firms up in the chart and I start to think we're going to break out, have a sustainable breakout above the trading ranges in QQQ and SPY, then I may extend targets. You guys know I do that all the time. If I'm in a trade, I don't modify a trading plan unless I see something in the charts compelling enough to do so. So just like I sometimes eliminate and take profits on an early target and eliminate the prior target, the additional targets, I will often, just as often, add additional targets if the charts start to firm up. And I think there's a good chance for more upside. All right, so I'm going to wrap it up here, leave it there. Really liking Bitcoin and Ethereum right now. It's two of my top picks. What else for you? You have the levels to watch for the VIX, everything else. Remember, we have Alphabet coming up tomorrow night. That's why I don't think the market's going to go down much more. We've probably already seen the lows for the day. The high for the day in the VIX would be my guess. Just right before this video, well, it was actually about 30, 40 minutes earlier, reversed everything just in active trading account. Just look for a little bounce. We're at support and all that. And again, Alphabet's going to report tomorrow night. Who else do we have? Amazon, I think, this week. So once those guys are out of the way, the market will be left to do its own thing. All right, guys, I'm going to wrap it up here, get the video out to you, and I did it in 18 minutes. I'll try to get as many whenever I can. I'll try to get these short ones out to you. But again, I can cover a lot more in these videos in 18 minutes. It would take me an hour to mark up all these charts and then get all the annotations. I talk fast in these videos and throw a lot of stuff out to you. And hopefully you find it useful. This has been Randy Finney with Right Side of the Chart. Have a great day.